Hello friends, my name is Ashok Sen Gupta and today we discuss a topic, we continue series of dividend modeling part 5. This topic also belongs to your subject financial management and corporate accounting of finance. Financial this lecture series today I will discuss on the various numericals. In previous sections we discussed about the Golden model, Walter model, all these model. So, in today's class I will discuss some numerical which are based on that model. So, let us start the numericals and to understand the concept much better. Following information pertaining to MS XY Limited, earnings of company 5 lakhs, dividend payout 60%, number of share outstanding 1 lakh, cost of equity 12%, rate of return 15%. It is given. So, we know that this is KE, this is R. So, what would be the market price per share as per the Walter model? What is the optimum dividend payout? Optimum dividend payout according to Walter model and the market value of the share at the payout. So, these are the two questions we need to calculate that. So, Walter model we know that I just doing here also D equals to D divided by K plus R E minus D whole divided by K whole divided by K. In this question, dividend payout ratio is 60%. So, earning is 5 lakhs. So, earning is 5 lakhs. Dividend payout ratio 60%. So, 60% of 5 lakhs is 3 lakhs. Number of shares 1 lakh. So, D equals D per share and EPS, what is EPS? Earning per share. Okay. So, put the formula 5 divided by K is point, what is K? K is 12%, 0.12 R D minus E minus solve this 15 into 2. So, 3 plus 1.5 divided by 1.2, 5 minus 3 whole divided by 1.2. Solve this one. 3.6 plus 3. 1.2 into 1.2, answer will be rupees 4583. Answer will be rupees 4.83. So, this is what? This is the price of the share. According to the Walter model, when the number of investment is more than, when the return on investment is more than cost of equity, the price per share increases as the dividend payers ratio decreases, or vice versa. Hence, the optimum payout ratio in this case is nil. Optimum payout ratio in this case is nil. The payout ratio is 0. The market value of the company is. So, D is 0. Formula, what is the formula? D plus R E minus 0 divided by K E whole divided by K E. So, when dividend payout ratio is 0 and R is 1.5 divided by 1.2, 5 is earning, dividend is 0, $7.5 divided by ये यहाँ चला जाएगा यूँ करके। और सो इन प्रीवियस सेक्शन जो आप देखिए कि जब डिविडेंड पे किया तो प्राइस ऑफ द वैल्यू सेक्शन, द प्राइस ऑफ द शेयर इज 45 रुपीज़ 0.83। जब डिविडेंड पे किया तो 45.83। अब जब डिविडेंड पे नहीं किया डिविडेंड पे नहीं किया, द प्राइस ऑफ द शेयर इंक्रीजेस। when dividend payout ratio decreases, when R is greater than K, then dividend payout ratio decreases. As dividend payout ratio decreases, price of the share increases. So, we proved that according to the theory of Walton model, when dividend payout ratio decreases, prices of the share increases. Let us do another example with Gordon model. With Gordon model, you can see clearly here that a growth firm, there are three nature of the firm, and these are the factors of earning. These are the factors: R, rate of return 15%, 10% and 8%. K, 10%, 10%, 10%. So, in this case, R is equals to K. In this case, R is less than K, and in this case, R is greater than K. Dividend retain earning per share 10 rupees, B, that is retained earning, is 0.6, and 1 minus B is already given. 1 minus B is 0.4, 0.4 format is given. So, our formula was, what was the formula? E, E 1 minus B K E minus B R, K E minus B R. So, in first case, case 1, when R is greater than K E, so earning of the share is 10, B is 0.6 and R is 15. R is 15, KE 10%, B is 0.6. So, and E is 10, 1 minus B R already given 1.4, KE 0.1 minus B into 0.15. This is 4, 0.10 minus 0.09, 0.09. So, 4 equals to 0.01 equals to 400, equals to 400. This is the value of price when R is 15, when R is 15. Okay. Now, when R is when R is 10, clear. So, when R is 10, earning is 10 rupees, 1 minus B, 1 minus B. K is 0.1 minus B 0.4 into R. In this case, retained earning is 1 minus B is 0.4, 0.4, K is 10% minus B into R. So, B is 0.6, R is 0.1. So, it is 4 divided by 0.10 minus 0.06. Therefore, 4 equals to 0.04 equals to 100, equals to 100. Now, you will see when R is equals to K, the value of P decreases from 400 to 100, from 400 to 100. Now, the last situation, when R is less than K, when R is less than K. So, what was the R? 0.8 and B is 0.6. So, our question is E 1 minus B K minus B R, E is 10, K is 10 multiply by B R. So, B is 0.6 and R is 0.08. Therefore, 10 into 0.6 divided by 1 into, sorry, it is not into here, minus 0.6 into 0.08, 48. So, that is 4 divided by 0.10 minus 0.048, that equals to 76.92, 76.92. Hence, the value of the firm again decreases or price of the firm decreases when R is less than K. Now, it is 76.92. Therefore, if the retention ratio changes from 0.6 to 0.4, the new share price will be C. हमने यहाँ चेंज कर दिया, रिटेंशन रेशियो जो पहले था 0.6 उसको हमने क्या कर दिया 0.4, तो 1 माइनस 0.4 6 हो गया यहाँ पर। B इसको हमने नया B कर दिया, दिस न्यू B। तो न्यू B से करने से जो न्यू ग्रोथ फर्म के लिए प्राइस होगा 150, नॉर्मल फर्म के लिए प्राइस होगा 100। सो ग्रोथ फर्म इज R ग्रेटर देन KE, R नॉर्मल फर्म के लिए R इक्वल्स टू KE। So, it is in this case you see रिटेंशन को हमने जब कम किया यानी कि डिविडेंड पे आउट बढ़ाया, तो यहाँ पर प्राइसिंग 400 था, यहाँ पे 150 हो गया और यहाँ पर 100 ही रहा इन द केस ऑफ नॉर्मल कंपनी, जहाँ पर R इक्वल्स टू KE हुआ करता था। वहाँ पे डिविडेंड पे आउट रेशियो चेंज होने का या फिर रिटेंशन रेशियो चेंज होने का कोई फ़र्क नहीं पड़ा। फॉर द डिक्लाइन फर्म इट इज़ 88.84, सेम फॉर्मूला 88.84। So, from the above analysis it is concluded that when R greater than K, the market value increases with retention ratio. When R less than K, the market value of share stands to decrease, and when R equals to K, the market value is not affect dividend policy. तो अगर आपका मार्केट वैल्यूज आपका R इक्वल्स टू K है, तो आपके डिविडेंड पॉलिसी में मार्केट का कोई फ़र्क नहीं पड़ने वाला, यानी डिविडेंड पे आउट रेशियो आपका कुछ भी हो, आपके मार्केट प्राइस में कोई फ़र्क नहीं पड़ने वाला। बट अगर आपका आपका इंटरनल रेट ऑफ रिटर्न IIR लेस देन है KE से, तो मार्केट प्राइस डिक्रीज होगा। इसलिए इट्स ए वेरी इंपॉर्टेंट, कंपनीज हैव टू टेक केयर अबाउट द इन्वेस्टमेंट पॉलिसी ऑल्सो। इफ देयर इन्वेस्टमेंट पॉलिसी इज गुड, they need to worry about the market prices with the dividend, because R, whatever you expected to earn from the investment is more than K, the cost of equity, you always having a profit. आपने 100 करोड़ का इन्वेस्टमेंट किया, उसमें से 50 करोड़ आपने 100 का इन्वेस्टमेंट किया, उसमें से आपका एक्सपेक्टेड रिटर्न है 10 करोड़ आपको साल का मिलेगा, और साल में आपको 2 करोड़ या 8 करोड़ 6 करोड़ आपको कॉस्ट आ रही है, कॉस्ट ऑफ कैपिटल आ रहा है आपका, अभी कॉस्ट ऑफ कैपिटल पेमेंट करना है आपका, तब भी आपका पैसा बचेगा। और जब वो पैसा बचेगा, दैट्स कंपनी इज नोन एज ग्रोथ फर्म, उनका ग्रोथ होगा, उनके ग्रोथ में वैल्यू एडिशन होगा। सो दीज आर द वेरी इंपॉर्टेंट कॉन्सेप्ट, हाउ फैक्टर्स वेयर वी नीड टू अंडरस्टैंड दैट हाउ dividend policies are impact on the share pricing, how company have to maintain their investment policies also. So, when they maintain their investment policy, then they get better return in compared to the cost of capital, and when they having better return in the cost of capital, then they do not need to worry about that. Their dividend price per share will be always increases. Okay, my dear students, today we end up the class with the conclusion of some numericals. These numericals are based on the Walter model and Gondel model, and in both numerical we saw that how prices changes or affected with the change in the with change in the dividend policy or payout ratio of the company. What is the difference? What is the difference when is a normal company, when is a growth company, when is a decline company, and how we can maintain the growth ratio or how we maintain the policies by proper investment policies. Hope you understand this video. Thank you for watching this video. Thank you.